Anybody out there who's buying a first home and obtaining a mortgage to buy that first home is going to get a document called the loan estimate. That loan estimate is probably going to get sent to you electronically. And when you open up that document, you're going to look at page 1 and see a huge number at the top, which is your loan balance. And then you're going to go down to page 3 or 4 and you're going to electronically sign that document. And you're probably never going to look at it again. And that's a mistake because on page 2 of that loan estimate, there are 21 different line items. 21. And in my experience, about 4 of those line items are going to be wrong. They're going to be wrong or inaccurate because lenders are using national averages or third-party databases for the estimates of these 4 line items. And most of the time, they're inaccurate. So today, I want to do something a little different. I'm going to walk through a loan estimate with you, line by line, section by section. I'm going to tell you what each number actually means, which ones you can shop for, what ones are negotiable, and what ones are probably going to be inaccurate. So by the end of this video, you're going to be able to look at your own loan estimate and know exactly what you're looking at. Welcome to the Jimmy Knows Loans channel, and let's go. I'm making this video because a loan estimate is not just a piece of paper that you get throughout the process of purchasing a home. It's one of the most important documents that you're going to receive and be able to review. A loan estimate is a federally regulated document from the CFPB. And when you receive a locked-in loan estimate from your lender when you're under contract on a property, the Section A fees are going to be locked in unless there's any sort of change of circumstance. A change of circumstance could be you decided to put more or less down, which will affect those locked-in terms that were originally sent to you. But everything else on that loan estimate, Sections B through H, are estimates. Keyword, estimates. And an estimate is only as good as the research that's behind it. I cannot tell you how many times a client has sent me another lender's loan estimate and either the title fees are off or the property taxes are using some generic rate that don't really apply to the county that the person is buying in, or there's just some hidden fees baked into Section B that don't make any sense. And the screwed up thing about it is clients out there, or if you're watching this, have no idea because nobody ever taught them how to read through or walk through a loan estimate. So we're gonna fix that right now. I'm going to pull up a mock loan estimate and we're gonna go line by line and make sure that you understand everything that's going on in this document. As always on this channel, as we finish up, we're gonna get into 3 key insights that you need to take with you after you watch this video. All right, everybody, before we jump into page 2 with the 21 different line items, let's get orientated. So this is page 1 of your loan estimate, and you're gonna see some big numbers on here. By the way, this is not an actual loan estimate. This is directly from the CFPB website. It's a mock example. You're gonna see your big numbers on here, your loan amount, your interest rate, your principal and interest payment. It's gonna say if there's a prepayment penalty or a balloon payment or not. And then you're gonna get projected monthly payment breakdowns with your principal and interest, your mortgage insurance, your estimated escrow for taxes and insurance, another breakdown of what your estimated taxes, insurance, and assessments are, and if they're in escrow or not. One key feature that you want to look at is this rate locked or not? If it is not locked, everything can change on this whole document. We'll scroll down here to page 3, and this is going to give you some additional information about the loan. What are you paying over the first 5 years for this loan? What is your APR, which is just your interest rate plus the cost baked in, and it's expressing the loan term as a rate over the life of the loan. This is not your actual interest rate. It's just your interest rate with the cost baked in. Lastly, you're going to see total interest percentage, the total amount of interest that you will pay over the loan term as a percentage of your loan amount. So what we want to dive into in full on this is page 2 with all of these different line items. All right, everybody, let's dive into the nitty-gritty of the loan estimate. This is the closing cost details page of the loan estimate. This is on page 2 of 3 of the loan estimate that you would have received. We're going to go through this document like a fine-tooth comb because this is the most important page of the loan estimate when it comes to your closing costs. So let's start with Section A, which are the origination charges, or in layman's terms, these are the lender fees. This is the cost of doing business with the associated lender that sent you this loan estimate. These charges in this section is where you're going to compare lender to lender when it comes to the cost of choosing that lender. In the origination charges, there's going to be different things like underwriting fees, processing fees. There's an application fee here on our estimate. There's also going to show you the amount of points you are paying or may not be paying, depending on the specific loan terms that you're getting. On this specific example, we're going to see an application fee and an underwriting fee. You might not see application fees on some loan estimates. You might see processing fee there. There might not be any sort of application underwriting fee in general. At the top here, you're going to see the points that are being charged on this estimate. So 1 point being charged would mean 1% of the loan amount. There's usually points when you are buying down your interest rate, which means you're buying down the interest rate from where the market's at. You're paying more to get a lower interest rate. In our specific example here, this loan estimate from this mock lender, this person is getting charged 1/4 point for the interest rate that they're getting on this loan estimate. Once again, Section A is where the lender fees live. This is where you need to compare costs when it comes lender to lender. Let's scroll down now to Section B. Section B are the services you cannot shop for. These are third-party services that are needed to close on the transaction and close on the loan. These services are required to close on the loan, but they are not paid directly to the lender. So for instance, you're going to see an appraisal fee on here of $405 for this example. That $405 does not go to the lender. They are collecting that fee and then sending it to the appraiser who does the appraisal work on the property. Same thing with credit report fees, the flood determination fee, flood monitoring fee, tax monitoring fee, tax status research, all required services that are needed to close on a loan when you purchase a home. But any of these Section B fees that are listed on this specific loan estimate are not going directly to the lender. They're going to the actual third-party service who is required to be used in order to get the loan closed. Now, in this section, there could be some baked-in fees like admin fee or application fee like we saw up here that could be baked in down here. What I would tell you as you're reviewing your loan estimate is if you have questions on these fees, ask your lender who is getting the money for the credit report fee, who is getting the money for the appraisal fee. Their answer should be that specific service provider. And if it's not, or if they hesitate, then you know something's up. All right, let's get into Section C now, the services you can shop for. The dollar amounts and items that are going to live in this section are going to be mainly title fees. Now, title on a home is super important. Title shows ownership of the property, that you are recorded owner of that new property that you are purchasing, or if you're refinancing, it's going to redo the mortgage under your existing title. When you are refinancing, title is a little bit less expensive than when you are purchasing because you are not transferring ownership from buyer to seller when you refinance. Whereas when you buy, there's ownership or title transfer from one owner to the other. The title fees are essentially making sure that you as a buyer, when you purchase that new property, you are not taking on any of the previous owner's mishaps or mistakes that came up on the title as a lien. Some things that can come up on there on a lien on title from a previous seller would be IRS tax liens. They didn't pay their property taxes. And you as a buyer are not responsible for taking that over. And the title insurance, which is the lender's title policy, along with the binder, is going to cover you for any of the previous owner's liens that have come up on the property. This says services you can shop for. And on refinances, you are more than able to shop for these services when it comes to a title company and the services that they provide. In the state of Illinois, when you purchase a home, the title fees and the title company has to be provided by the seller based on how our purchase contracts are drawn up. If you have questions about the services you can shop for and you're purchasing a home in another state than Illinois, I would reach out to your loan officer and ask them, is this something that we can shop for, or does the seller have to provide us these services when it comes to a title perspective? You see on here, there's things like pest inspection fees, survey fees, insurance binder, like I said, title search. There might be another line item on here that has a notary fee. Once again, these are not lender fees that are being charged. These are third-party services that are going directly to the third party, not into the lender's pocket. Section D is very self-explanatory. This is just showing you the total loan costs. So if you look here, Section D says total loan costs, A plus B plus C. It's adding up A plus B plus C that are all itemized out into one clean dollar amount. On this specific example, we're at $56.72. All right, let's get into the other cost side and sections of the loan estimate and your closing cost details. The other costs are a bit confusing, so we're going to go through this section by section, line by line, of course. Let's start with Section E, the taxes and other government recording fees. The dollar amounts and fees that lie in this section go directly to the county or the state that you're specifically buying in. You're going to see recording fees and taxes, and then on this one, you'll see transfer taxes. Now, this section, Section E, is the biggest variable when it comes to the state and the county that you're buying in. In Illinois, in Cook County, there are transfer taxes, downtown Chicago, Cook County. However, there are other areas in Cook County that might not charge transfer taxes. In different counties across the state of Illinois, there are no transfer taxes, but there are always going to be recording fees. There are, again, a lot of variables when it comes to this Section E, depending on where you live in the United States. Once again, these fees do not go to the lender, but they do go to the county and the state for recording and tax purposes. Check with your lender to see if there are transfer taxes in the area that you are purchasing. There will be recording fees. The next section on here is the prepaid items, Section F. The prepaid items are going to consist of your homeowner's insurance premiums, your mortgage insurance premium, if necessary, based on the loan that you're getting, the prepaid interest, and then property taxes if they are due at the time closing comes due. So prepaids, all this means is that there are items when it comes to insurance, prepaid interest, and property taxes that need to be paid at closing as opposed to after closing. This is all going to depend on the time of the year that you're purchasing and when those property taxes come due. And most lenders will require at least 2 months of your homeowner's insurance premium being paid or the full year being paid. One of the biggest questions that I always get is, what is prepaid interest? And I'll explain it to you very easily. Prepaid interest is interest that's accruing on the day that you fund or purchase your new home through the first of the next month. So unfortunately, right when you purchase a new home, there is interest accruing on that mortgage. So in this example, it's showing 15 days worth of prepaid interest. It's about halfway through the month is when this example closes. There's interest accruing on the 15th through the 30th on that new mortgage. Your next mortgage payment will take care of all of the principal and interest of the month that accrued the month before, but there is prepaid interest or odd days interest that's accruing from the day that you fund your loan through the first of the next month. All right, now Section G, your initial escrow payment at closing, a little bit different from Section F with the prepaids. If your loan requires an escrow account, or if you are choosing to have an escrow account on your loan, this is the pre-funding of that escrow account for taxes and insurance to make sure that by the time these things come due, your taxes and insurance, you have enough in your savings or escrow account that's placed with the mortgage company when those things come due. So you are pre-funding or pre-padding an escrow account at closing. On this specific document, notice that it says 2 months and 2 months. It's not always going to be 2 months and 2 months because property taxes come due at different times of the year in different states and different counties. So all this is going to do is make sure that you have enough in your escrow account for the property taxes, and when your homeowner's insurance comes due next after you're owner of the home, and there is going to be a cushion, there should be a cushion in this escrow payment at closing of about 2 months for both property taxes and homeowner's insurance. This is listed as a cash to close or other costs. This is really not a cost. When I'm speaking with clients, I tell them you are going to have to pay your taxes and insurance no matter what. You are just pre-funding your escrow account for those taxes and insurance so that by the time they come due, you have enough in that account. Again, more than likely should be a 2-month cushion on top of what's actually needed to make sure that you're whole when those taxes and insurance come due. And then lastly, section H is other. These are kind of optional fees or fees that you may have not opted into yet. One is the owner's title policy. Now, in the state of Illinois, this is paid for by the seller. This will change state by state, though. Other things that could be in here would be attorney fees if you live in an attorney state, maybe some sort of inspection fee. Maybe you're paying your realtor's commission on the buy side. Those other fees will fall into this section H and will be displayed and estimated on there. If you're working with a good loan officer, they are going to over disclose on this initial loan estimate on these other fees. And when things come back or you opt out of certain things, they would be removed for the final closing disclosure. So I is similar to D on this section where it tallies up the total other costs. We're talking sections E, F, G, and H, and it's tallying those up. And then lastly, you get the total closing costs, which is section J. Section J is going to show you it's D, which is the total loan cost of A plus B plus C, plus I, which is the total other costs, E plus F plus G plus H sections, and tally those up for a total loan cost. In this total loan cost section, if there are any lender credits that you're getting from your lender, they should be disclosed in this here to subtract from the total loan costs. The calculating cash to close is one of my favorite items on this loan estimate because it's going to break down everything for you. You are looking at the total costs, which we just went over is section J, any closing costs financed or paid from your loan amount. Then it's going to show your down payment or funds from the borrower, minus any sort of earnest money deposit that you put down, minus any seller credits or adjustments or other credits that you're getting to give you a total estimated cash to close. So you can always work backwards on this too when calculating your cash to close based on how we went through this document. But the calculating cash to close, again, is one of my favorite parts of this because it's really breaking it down in an easy sense. And then you can go line by line to see how these add up to give you your estimated cash to close. It does include down payment. It does include total closing costs. So this number is the true number needed to close on this property is the estimated cash to close. Insight number 1 is the only section that your lender directly controls is section A. Everything else on the loan estimate is just a pass-through. Government recording fees, prepaid interest, property taxes, insurance. When you're comparing lender to lender, just compare section A. That's a fair fight. Everything else on the loan estimate should be roughly the same no matter who you choose. Insight number 2, page 2 on the loan estimate has upwards of 21 different line items. At least a few of these 21 line items are going to be general assumptions. They're not going to be exact based on the actual property that you're buying, the county that you're buying in, or even your specific financial situation. So when it especially comes to things like title fees or property taxes, you're gonna have to do a little homework on your own and try to verify those yourself. And insight number 3, the loan estimate exists for a reason. The government didn't mandate this 3-page document for home buyers just for fun. The document's there for you as a home buyer to make an informed decision. It's also there to protect you as well too. But it can only protect you if you read through it and you're informed about what's going on that document. You're in the middle of buying a home right now and you have a loan estimate handy, whether it was emailed to you or you printed it out. Go ahead and pull it up while you're watching this video. Go to page 2 and see if everything lines up with what this video said. If something jumps out at you, drop it in the comments. This could help other people who are going through the same thing that you are, and it could also be another topic for a video. As always, please hit subscribe if you want more of this. I'm here to just bring the mortgage world to you, the home buyer, the consumer, in plain English, no jargon, no fluff, no BS. Thank you as always for the support. Hit that like and subscribe button if you love this video. Drop a comment below to let me know what you want to see on next week's video.